Hey everyone, welcome back to the channel. I've been getting a ton of messages lately, from emails to Reddit DMs, asking about how I screen for cash secured put candidates. And so today I thought I'd peel back the curtain and share my personal process with everyone. Now I know it's been a while since my last video, and there's been good reason for that. So I've been neck deep working on something that I'm really excited about. This is the Beginner's Guide to Options Mastery. It's an 11 module video course that I've been crafting, and it's set to launch at the ending of March, beginning of April of this year. And I cannot wait to share it with you. So it's going to contain around 10 or 11 hours of video, lessons, quizzes, all designed specifically to help educate new traders to exactly what options are, the terminology, the usefulness of options compared to other instruments, and just about anything that a new option trader would need to learn in order to embark on trading these fantastic instruments in a way that's educated and thoughtful. With that said, I'm going to post a link in the description below that you can use if you are interested in getting on our wait list to be notified about updates for this course. I'm certain we'll be providing discount offers as well for those who want to sign up early before the launch date. Let me know if you have any questions down in the comments. And so now let's get back to it. All right, I want to make one thing clear right off the bat, that this is just how I do it. There are definitely 1,000 different ways to screen for option candidates, and mine isn't some foolproof, one-size-fits-all proprietary method. And it doesn't replace good old-fashioned research and that gut feeling that you get, that you develop with experience. So even with a solid process, sometimes trades just don't go our way. And that's okay, because I know that over time, the statistics will bear themselves out. So for me, I like to sell cash secured puts with an expiration date between 30 and 45 days away. I know that some people profess that they make big bank by buying or selling these zero data expiration options or weeklies, and that may be true. And if that works for them, then great, that is their system. But I just don't have the bandwidth to sit in front of the screen all day and basically day trade. I've done that years ago, and I just don't like the anxiety that it brings on. I like 30 to 45 days because it allows me to glance at how my trades are working out maybe once a day. But for the most part, it takes the anxiety out of the picture by not having to watch every tick go up or down. I prefer a much more relaxed trading style. All right, so I'm going to be showing you my screens and how I do it, and the tool that I primarily use is ThinkOrSwim, which is currently owned by Schwab. I've used ThinkOrSwim for years and years and years, and frankly, in my opinion, it is the greatest and best tool for options trading and screening and analysis that you can possibly use. It's just fantastic. But Schwab currently owns it right now. And I think if you've got a Schwab account, you already have access to it. If you don't have a Schwab account, I think you can open one up for minimal amount and then immediately get access to it. I think ThinkOrSwim is just so robust when it comes to being able to formulate screens and being able to go through a tremendous amount of data very, very quickly and give me what I'm looking for. However, with that said, I'm sure that there are lots of other third-party option screening tools out there that you can plug these different criteria into that would give you essentially the same kind of information. So what I'm going to be showing you here today in ThinkOrSwim is not proprietary to just ThinkOrSwim. It can definitely be ported elsewhere. Okay, before we really get into it here, I want to emphasize the number one question that I always ask myself when I am looking at candidates for cash secured puts, and that is this a stock that I don't mind owning in my portfolio for a while? If you have trepidation about owning a certain stock in your portfolio for a while, then you should not be looking at them as a cash secured put candidate. You should only be looking at stocks that you are comfortable and want to already buy with your own money so that you can put them away and let them grow on their own. If you're not comfortable with owning the stock that you're looking at for a cash secured put, then you should strike them off your list. Okay, so here we are in ThinkOrSwim. And I've set up a custom scan up here called Dan's, cash secured puts, 25, 45 days to expiration. Simple setup here. And I scan for all stocks. You can choose all kinds of stuff. I'm not going to go into great detail about how you set up scans here in ThinkOrSwim. I'm just going to show you my criteria. But I scan for all stocks in the system. You can intersect this list with other lists that you might have. I don't do that, but I do keep a list of stocks to exclude so that they don't come through on the scan results. And the reason is there's a variety of stocks out there that no matter what, I just don't want to have in my portfolio. I don't want to trade them. I don't want the risk of owning them. And they range from, meme stocks to other kinds of stocks that I have different reasons that I just don't want them in there. So I keep this list of stocks to exclude. And so when I apply the exclusion filter here, it'll get rid of those so I don't have to look at them. Filter number 1. Let's start with the stock price. I like to look at a stock price between $15 and $150 that I've set up here. The main reason I look at this range is because it eliminates a lot of super low price stocks that might have higher risk or really low liquidity. And it avoids the really expensive ones, which can tie up an awful lot of your capital just for a single trade. So I want to strike a balance between how much capital I'm putting out on a trade, but also have the opportunity to earn a decent amount of premium for however long that I am holding that trade. Second criteria is the market cap. Now, I've added a minimum market cap of $1 billion, and this ensures that I'm focusing on more established companies. I mean, small cap stocks, they tend to have a tremendous amount of higher volatility and less predictable price movements, which really, for me, isn't ideal for this strategy. I keep it at a baseline of $1 billion and up. My third criteria is the bid price of the option. I set a minimum option bid of 25 cents. And the reason I do that is because I don't want to waste my time on contracts that aren't really offering any meaningful premium. To me, anything lower than 25 cents just isn't worth the risk for the amount of capital that I typically will tie up in a single trade. So I set my minimum bid at 25 cents. The next piece of criteria is my days to expiration. And here in this particular case, I'm targeting a range of 20 to 45 days. I said earlier, I usually look at stocks that are 30 to 45 days. I just find that if I lower the screening minimum to 20, that helps to capture some that are maybe 25 that are still really good candidates. So I'm willing to at least take a look. But by and large, I rarely will put on a trade that has 20 or 19 or 18 days to expiration. I will usually always look at putting on a trade that is at least 25 to 45 days. But I set this here just so it can show me what it might find. Sometimes it does find something. Let's see here. So the next one is delta. And I'm not going to go into detail explaining what the Greeks are here. That's not the point of this video. But for me, I keep the delta at a range between negative 35 and negative 10, or just 10 to 35, basically. And this gives me good probability of success, while still I'm able to collect a reasonable amount of premium with that. And so think of delta as the probability that the option is going to end up in the money. So lower delta generally means a higher chances the trade's going to expire worthless, which is kind of what we want here. It's sort of the point of cash secured puts. All right, the next criteria is our return on risk. And this is an important one. I also filter for this because it ensures that the premium that I'm going to be collecting is worth the amount of capital that I'm putting at risk. So I have set my minimum return on risk as being 4%. In other words, I like to get 4% approximately for my trade. So for capital I'm investing for a period of approximately 30 days, if I can get 4% plus or minus 1 on either side, then that's a winner. You know that is a great return for 30 days worth of work. Many banks are offering 4% just for an entire year. So if I can get 4% or so, that's great. And sometimes I'll play with this. I'll notch it down a little bit. I don't put a ceiling on it, but minimum 4% is what I'm looking for. I just kind of want to find that sweet spot between risk and reward. And for me, I notice it's kind of like 4%, 5%. Sure, I can find a lot of trades that offer like 18%, but those are going to be risky. I don't engage in those. The next criteria here is a volume. Volume is super important. I set my minimum at 100 contracts traded. I want to know that the option contract that I'm trading has a fairly decent liquidity on any given day. It matters because low volume options can have much wider bid-ask spreads, which makes it really harder to get in and out of the trades efficiently and affordably. When you have really wide bid-ask spreads, I don't want to be having to notch my trade price way down or way up in order to get in or out of the trade. Decent liquidity helps to decrease that probability of having a hard time of getting in and out of the trade. Next one is percent out of the money. This one is really important to me, and I'll show you why later on. This basically means how safe is the strike price of the option relative to the current trading price of the underlying. So if a stock is trading at $50 and the strike price is 10% out of the money, that strike price will be $45 because that's 10% less than 50 and so forth. And for me, I don't want to be trading or selling cash secure puts that are really close to the current price. Yes, the premium is higher, but it's higher for a reason, because the odds of your trade not working out, or at least you being assigned, is going to be very high. This one's really important to me. My minimum is 10% out of the money. My maximum is up to 50. Any more than that out of the money, 60, 70%, it's like there's no premium available at that point. Typically, my sweet spot for most of my trades is a cushion of around 20%. I also refer to this as percent of safety or margin of safety. But typically, my sweet spot is usually around 20% away from the underlying's current price. That's sort of the strike price that I'm looking for. It's not very often that I'll go 15%, maybe. I rarely will ever go 10%. Minimum 15, but 20 is kind of where I'm looking. All right, next one down here is a custom formula that I've created for implied volatility. And so I'm looking here basically for filtering stock and options that have a volatility greater than 40%. Sometimes I'll adjust this down to 30%, but I'm looking for IV that is around 40% and higher. I don't want anything too extreme. That can also, risk some, or at least portend that there's some risky situations coming ahead. If implied volatility is like 400, that tells me that this stock is just a storm. There is something happening here that is not right. 40 to 100% that's kind of the range that I look for. But I've triggered this to capture those that are currently at 40, and then we'll see where it goes from there. And there's times where I'll tweak all of these and, slightly if I'm not getting a big return. But the thing is, I run the scan roughly once a day at the end of the day, or every couple of days. It's not important to me to run it every single day. When I do run it, if I don't have a list of candidates that look decent, then I'm not going to worry about it, because tomorrow's a new day and there's definitely going to be more tomorrow. In running the scan, I get back 71 results. And this shows me not only the stock, but the option contracts that fit the criteria I show here. All right, so my next really important aspect of this scan is to define what data points that I want to have available to me to analyze later. And ThinkOrSwim will let you configure the results with all kinds of data points. I mean, tons of data points. And you can do it right under here using this little silhouette wheel tool. These are the data points that are most valuable to me. I'll start with symbol. Tells me the name of the underlying and also shows me the actual name of the option and what that is, the description. It shows me the strike price, NA, because this is not an option, but this is. The strike price is 50 and 20 and so forth. So I know the strike prices, the last price that was traded by the underlying and also by the option. And then the underlying last, this just shows me the price that the stock itself was trading at, or ETF, at the time that I ran the scan. This gives me my implied volatility, so I know what my implied volatility is. This shows me the days to expiration, the NAN, that's programmer speak for not a number, and that's because stocks don't have expiration dates, but options do, so they'll show up 42 days for this. Rate of return is super important to me, and this just tells me what the return is that I can expect trading this particular option contract. Percent out of the money. This is my margin of safety that I talked about. Super important to me. This just tells me how far away the strike price is from the price of the underlying at the time. 10.5%, 23%, 13%, and so on. And so I need that. The other one I want to look at is volume. And this shows me the volume of the underlying, and it shows me the volume of the actual option contract. So I see that it's picking up all of those proper volume metrics. It shows me the bid price. This is the bid of the underlying, but this is the bid of the option contract right here. And then delta. Delta comes through. You'll get a 1.0 delta for the underlying because stocks don't have delta, but the options do. So 31 delta, 29, 23, 25, and so forth. With all this information, this is what I can use to begin to formulate the basis of making some decisions. Now, in this current form here in ThinkOrSwim, it's just tabular information. It looks pretty boring, and it's actually really difficult to make heads or tails out of it and to let the really quality candidates percolate to the surface. In the next step, we're going to be bringing this information into Google Sheets, then applying a variety of conditional formatting formulas onto it, and basically takes this information, makes it come to life so that my eye can be drawn to the top candidates for consideration. So to export this list out of ThinkOrSwim, we come over to this area right below the on-demand button, this little hamburger menu, and we go export to file, and I drop my exports into the downloads folder here on my MacBook. That's how I export that data. It's exported as a CSV file, which means it can be super easy to open up in any kind of spreadsheet application like Excel or Google Sheets. I use both, but I tend to primarily use a lot of the Google tools because when I'm on the road, they're just easy to be available to me because they exist in the cloud. And so I use Google Sheets a lot. I'm going to pause here. I'm going to flip over to Google Sheets and I'll show you what I do with the data that we just downloaded. So now that we've downloaded the data from ThinkOrSwim, I'm now sitting over in Google Sheets, and I'm going to bring this information into it and be able to look at it in a more meaningful way. So I've got two sheets that I've set up here in Google Sheets. I've got a raw scan data sheet and a clean data sheet. The raw scan data sheet is where I'm going to bring in all of the CSV results from the ThinkOrSwim scan. And you'll notice across the top here, I've got the same labels of the columns that appeared in ThinkOrSwim. So I'm going to click on cell A2. I'm going to go to File, Import. I'm going to upload. I'm going to browse where that was, which was my downloads folder, and it's right there. So I'll select that, open. It's going to think about it. And for Google Sheets, in this particular case, I'm going to import location. I'm going to choose replace data at the selected cell. So it's basically going to start loading that data in where my cell is currently clicked, which is A2. So I'll do that, and we'll import the data. Okay, now at first glance, this doesn't look any more attractive or readable than it did in ThinkOrSwim, but we need, in order to get it to that point, we need to bring it in. This sheet acts as the basis for the clean data sheet. So this holds all the data that we received from our scan. I've created a helper column here, which computes the percent of out of the money a little bit better, because I noticed that in ThinkOrSwim, for whatever reason, the calculation might not be totally accurate. And so I create a little helper column, which just does the simple calculation for me on the fly. So our data is in here. Now, switch over to my clean data tab, and clean data is basically referring to all the data that's in the raw scan data tab, and it begins to apply a lot of conditional formatting, which helps to bring to the surface the candidates that are most interesting to me. I'll just walk you through this sheet, and I'll show you how I think about things. So the first thing is I've added a couple of columns here that has a spark chart that just shows me the last 3 months of what the curve of this stock looked like. Is it up 19%? This one's down 10%. This one's up 128% over the last few months. And I can change this, how many months I'm looking at, by just altering this cell here. So if I go, well, show me the last 6 months. What I like to do is look for stocks that are generally in an uptrend. I don't want to sell cash secured puts on stocks that are heading downward and downward and downward. I want stocks that are on an uptrend. And even though these fit my criteria, I like to quickly screen out those that seem to look better than others in terms of whether or not they're rising or falling. And so I can look at it from 6 months, and I can change this back to 3 or anything I want, and it'll load that data and create these, great little spark charts. And I've added other conditional formatting so that I can quickly see which ones are really green, which ones are really red, and everything in between. And so that just kind of, it's not the first thing that I look at, but I will refer to this later on. I've got my symbol here. I've done conditional formatting so that it separates all of the underlying stock name with the options right below it. So it kind of makes it really easy to organize. And then I've got my strike price, I got my last price, underlying, implied volatility, days to expiration. Now, here's where I've done some conditional formatting for rate of return, margin of safety, and premium. These are 3 items that I look at very, very closely that at least get my interest peaked. So for rate of return, again, I'm looking for a minimum of 4%, maybe 5 or 6%, but for the fun of it, I've created conditional formatting on this column that highlights the top 5 highest rates of return available. So I can just scroll through here and I can go, oh, this one is 934. What is it? DJT, a stock that I'm not really that interested in trading just because it's too whippy and volatile and kind of memey. So, and I can scroll down here and I can go, oh, this is high. This is one of the top 5 highest values in this column. So this will give me 8%. This one will give me 12%. I've got 10% here, almost 9% here. So this kind of brings it right to the forefront. I've done the same for my margin of safety. Again, I'm looking for stocks that have the highest margin of safety possible that can still give me the kind of return that I'm interested in. So I've created conditional formatting for this column that shows me the top 5 highest values in this column. 30% margin of safety with a 6% return. I can then go over here and take a look at it. Ionic, which is currently one of the quantum computer stocks that's really hot right now. 27%. And I can go through here and these just jump out at me. 28, 26, like, oh, okay, these have high. These fit my qualifications while still having really high margin of safety. Those are intriguing. And then lastly, under the premium column, I've created conditional formatting that shows me the top 5 highest values of how much premium I can earn for my trade. $26.90 on this one, $2,500, $2,600 on this one. And so my eye goes right to that. And so how do I get this premium value? Well, what I have done over here is created a little tool which lets me sort of tell the system how much money I want to invest in a single trade. Now, with my account, I usually will commit around $30,000 per trade. And based on $30,000, it'll calculate how many contracts I need to buy, and this is what the premium would be for that amount of money invested. This would be my rate of return and so forth. Or if I'm only committing $10,000 per trade, that'll be $10,000. And if everything else gets updated automatically, the premium values get updated. The rate of returns pretty much will stay the same. They're all relative. But I can quickly see how much money I'm going to make for that amount. I can go down to $2,500 and I can see, okay, I'll make a couple $100 here, and it's all relative. So the thing is, if you, with cash secured puts, if you have a very low dollar amount, like $2,500, it does limit your ability to trade certain stocks, because as we know, option contracts control 100 shares. So you need to have enough cash in your account to cover 100 shares of the stock that you want to potentially buy. And if the price of the stock is too high, well, you might not have enough. And so therefore you can't afford to buy it. For example, with $2,500, we can't even afford one single share of this particular stock, which is GME. And so something to be aware of. People ask me, how much money do you need to begin to trade cash secured puts? And you can do it really with small amounts like this. The downside is it does limit your ability to trade higher valued stocks, which tend to be a little bit more stable, which tend to be a little bit more consistently profitable, and so forth. But the principles are the same. It's not that you can't do it, but it does limit you. And I think you know what I'm saying. So I'm going to bring this back up to $30,000. And so what I've done here is to create these three columns, which basically look at how much I could make if I am looking to trade one trade and commit $30,000. It will go through these three colored columns, ROR, margin of safety, and premium, and it will find the very highest values in each one of those and bring it out here. And I'll go down here, and you see this one has the rate of return and the premium are both very high on this one. And so, when I see two or three all together on the same one, that catches my attention. It doesn't guarantee I'm going to take a trade on it, but it does catch my attention. And in this case, this is PRAX, PRAX, and it's the February 25th $50 put. The stock's currently trading at 63. The put on that strike is 50. That's a 12% rate of return. And my margin of safety is 20% on that trade. And the premium I would get is $3,700 off my $30,000 investment. Not too bad. So these three columns here basically take a look at how much I'm going to invest and finds what theoretically the top values would be if I just look at premium, or if I just look at margin of safety, or if I just look at rate of return. Let's say I want to take $30,000 and I want to look at three different trades. So that's $30,000 times three, not divided by three, but $30,000 times three. So let's say I've got $90,000. I want to commit $30,000 to three different trades. Show me here how much I could potentially bring in premium, the top premium values, if I just look at rate of return, if I just look at margin of safety, or if I just look at the highest premium values. So using just the top three of the yellow, which is margin of safety, if I look at the values for those items that have the farthest out margin of safety, you can see I would make about $5,700 this month, not as much as this, but because, of course, the margin of safety is way, way, way out there, the premiums are going to be much lower. And so I'm much safer going with this value. And those two are right there and so forth. So I can then run over here and go, what are those? Oh, ionic and lunar and so forth. And then I can also go, well, I'm curious about just using this one. And so I'll grab the premium value here. I'm curious about using this one. And this will at least tell me, like, okay, if I trade these two, I'll make around $3,500 in premium and so forth. So I can do it that way as well. Basically, what this color coding does is it isolates to me, the top three most important attributes of the puts that I'm looking for: the rate of return, the margin of safety, and the premium that I would earn off of it. And it color codes those to the highest values found in the column. And if I step back, I don't know if I can do this. If I step back and really look at the whole thing, this is more like the way it looks on my other main Mac, I can quickly see which ones kind of draw my interest based on the colors that get highlighted. And like this one down here, I know it's way small, but you can see just from the colors that this particular option, I've got 2 out of 3 that are all lit up. If I had 3 out of 3, now I'm really going to look at that close and see, what's going on here? But this at least narrows down a list of, 30, 40 option contracts to the ones that are the most intriguing in terms of the metrics that are important to me. And from there, I can then do my research. And what I will do is I'll go, okay, well, this is interesting. I don't want to look at Trump's thing, but like I can go over to like Lunar and I go, okay, well, this is interesting. Maybe I'm not that familiar with Lunar and this one has come to the surface, so I want to learn more. This is where nuance kind of comes in. This isn't a black and white thing. This just brings me a silver platter that has some, like the top 5 most interesting candidates sort of set aside. It's like, hey, take a look at these. These could be interesting. So from this point, I'll usually jump over to Schwab and I will use their research tools in Schwab to look up Lunar and take a look at who are these folks and what's their situation look like. Schwab has great research tools. It's not the only way to do research, but for me, I'm familiar with it and I'm comfortable with it. And then I can download PDFs of latest quarterly reports and other financial information right off of Schwab and read those. I don't actually read those reports because they're boring and long. What I will tend to do is upload those reports, those PDFs, directly to ChatGPT, and I'll say, hey, read this. Tell me everything you know about this company. What does this PDF tell you about their current situation? And I'll ask ChatGPT a lot of pointed questions about its opinion relative to this stock's performance or over the next upcoming 30 to 45 days and so forth like that. So I can analyze a lot of stocks quickly with ChatGPT. I can take a screenshot of the entire page of the Schwab research reports that are given and just copy and paste that image directly into ChatGPT, have it look at it, have it give me its opinion about things. I can screenshot a full-fledged chart of the company and have it give me its assessment as well. And so this is kind of one of the many ways that I will begin to do my research on which of these candidates to look for. I will tell you that it's easy to be drawn to the highest values that you see in the premium column here because they're big money values. Like, oh, well, I want to just, of course, I want to sell premium. It'll give me the highest value. But as we all know, with options, the greater the gain, the greater the risk. So I have to weigh those two different things like a set of scales. Yes, there's rich premium here for sure on some of these. And if I just blindly go and get it, I could, that could work out, but there's probably a good chance it may not as well. Sure, I could go and look at the highest rates of return shown in the green column here and just go, well, that's the option I'm going to sell puts on. And you could do that, but one needs to understand that the higher the rate of return, the greater the risk of assignment. So it's easy to find ones with big rates of return, 12.4% here for a premium that you would hold for 30 days. Incredible, right? I mean, annualized over 100%. Fantastic. But if you just go strictly by that, then you run the risk of being assigned. So it's a balance of finding an acceptable rate of return, an acceptable margin of safety, which again for me is about 20%, and then acceptable premium. And so coincidentally, Prax right here has really got me intrigued. It's trading at 63. This particular option is a $50 strike. It's got 42 days to expiration, roughly a 12.5% rate of return. I'm sitting at about a 20% margin of safety, and I can get $3,700 out of a $30,000 outlay of capital. That's pretty good. It's got me intrigued. my research doesn't end here. I will look closer at it and decide whether or not I think it's worth it. Or I see Praxis kind of running sideways here a little bit the last 3 months. I can quickly tell. I got 5% return over the last 3 months. All right, not too bad. Chart's not too bad. I don't mind a little sideways movement or a slight upward movement, but I want to know what's going on with the company. I want to know what news events are sitting out there. Are there earnings? Are they waiting on some unknown piece of information to be revealed? You know, there's a lot of reasons why premium is rich. So even though all this stuff looks very intriguing, now my research and my nuance begins. I can tell you from experience that a $30,000 outlay for me on a typical trade, I'm happy if I can get $1,500 to $2,300 in premium, or, you know, roughly 5-6%. If I can get that's a winner in my book. And that's relative to any amount. You know, if I was trading $5,000 and I could still get 5%, that's good. And I can still, if I still have like a margin of safety of about 20% in that trade, that makes me feel more comfortable. So this scanning system gets me about 90% of the way there. It gets me a plate full of candidates, and then creating this sheet that highlights a lot of the top interesting candidates for me. Then begins my process of research. It gets me about 90% of the way there. And then it just comes down to my own research and my own gut. If my research shows me that there are unknown events out there, like data from a research study that is waiting to be revealed, or maybe a merger and acquisition that hasn't been quite finalized yet, but maybe it's kind of sitting out there. There's a lot of anticipation. Like, there's a reason why options are going to have really rich premium. It's not because they're just totally average. And so I want to know as much as I can so I can make the most informed decision. And you know what? Sometimes I might look at this and go, okay, well, this is a $50 strike on this one. I'll go into my trading platform, which for most all my trades, I use ThinkOrSwim, but I also use Tasty Trade. And I'll take a look at the option chain and I'll go, you know what? Maybe what do the $45 strikes look like? Well, it's still, you know, this one was probably weekly or something. Yeah, so 10% return on this with a 28% margin of safety for $2,900. So, you know, $700 or so less in premium, but maybe it's a little safer. And so this will start me on the process of looking around. Once I get into the option chain, I might then take a look at other strike prices that might make me feel a little bit more comfortable and get that margin of safety kind of pushed out a little bit more. 28% margin of safety on this one, 30%. That makes me feel better. Not that it can't be hit, you know, if there's some unknown event that takes place, but it puts me in a better position to potentially be assigned at a lower price. This is kind of my rough overview of how this goes. I'm happy to answer any questions people have. I try to play it conservative. I try to play it, you know, conservatively, but, you know, maybe push the edges just slightly. But I'm not looking to just, you know, go black and white on what this sheet tells me. It's just a starting point for me to begin my research. And honestly, I can research 5 opportunities like this a day in less than 15 or 20 minutes. If I'm only, you know, at any given time, I've got, you know, 5, 10, 15 trades going, but it's not like I'm putting them on necessarily every single day. And sometimes I might go a week and not even put a trade on. The amount of time I put into it weekly is really not that much once I've got this all set up and I know what I'm looking for. I know everyone is looking for this big red easy button that they can just press, and then a set of instructions come out or a stock ticker comes out and just says, this is the one. Trade it. Don't ask questions. Just do it now. And there's a lot of people that will sell you systems that just take all the thinking away from it. I have a hard time believing, in my experience of trading things for 30 years, that there's reality to any of those. And besides, why would you want to rely on somebody else's black box system just telling you what to do? What if they just disappeared and went away one day? Now you're stuck. What I try to teach when I mentor people is to be completely independent. I teach you how to think. I teach you how to use your own gut. I teach you to be independent so that you don't have to rely on anybody else to provide for you. So you can do this by yourself on a beautiful sunny beach somewhere without having to rely on some Discord server or some paid chat service or paid newsletter telling you which stocks to do. I don't know why people do that. I think they're looking for the lottery ticket. I would much rather be completely independent and trade using my own brain and my own experience. And I would encourage you to be that way as well. So anyway, this is my system. I'm happy to answer any questions that you have down in the comments below. All right. Well, that's it, folks. That is the process that I use to screen for my cash secured put candidates. Simple, structured, tailored to my trading style. And like I mentioned earlier, this isn't the only way to do it, but it's a system that's been working well for me. And even with a great system, though, always remember that trading requires patience, discipline, and a little bit of that gut feeling that you build up with time, and that only comes from experience. So if this video helped you or gave you some ideas for your own screening process, let me know down in the comments. I'd love to hear what works for you or answer any questions that you've got. And if you haven't already, hit the like button, please. It really helps the channel. And be sure to subscribe so you don't miss future videos. Oh, and don't forget to check out the link in the description to sign up for the pre-launch waitlist for my upcoming course, The Beginner's Guide to Options Mastery. Again, it's an 11-module deep dive into options trading. It's designed to take you from beginner to confident trader. And it's launching at the ending of March, early April, right around there. And if you're on the wait list, you'll be the first to know when it goes live, and you'll be the first to have opportunities for discounts and other freebies and bonus material that goes along with it. So thanks again for spending some time with me today. As always, trade wisely, live fully, and I'll see you in the next one.